What up everybody, welcome back to Royal Blu FX. In today's video we're going to go quickly over some of the trades that we've taken as of last week, Friday, which is the October the 21st. I'm going to do a quick recap video on US30. One of the things I really want you guys to really take away from the videos that are released based off of the recap videos, I really want you to learn a lot from them only because I pour out a lot of my heart and soul onto them obviously. So one of the key takeaways I really want you guys to pay attention to whenever I do recap videos like this, I really want you guys to be looking over them a lot only because I put a lot of my heart and soul into them in terms of going over so much detail, right? You guys are able to pick up my brain in terms of what I'm talking about, in terms of how I enter, in terms of what I look forward to in a trade, right? Where my anticipation is in a trade and all that sort of stuff. You guys will learn so much more because of how much information I start pouring into these videos. Also, if you haven't already, please go ahead and subscribe to this channel because we always leave free content. And if you're interested in trading and you want to learn more on trading and you like our style, go ahead and visit our website at RoyalBluFX.com and start today with us. So let's begin.
Yes, I would. 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 Yes, I would.
All right, so this was last week, Friday. We've honestly had so much success on Friday. Like we always do every single day, we pretty much have a lot of success every single day. Although there are times when we do lose some trades or, just don't have a great, successful day in terms of, making so much R&R. But anyways, whenever you're making any kind of wins, you're always, it's always a good day, right? So anyway, let's start here. So right now we're on the 15-minute chart. We use that as our higher time frame. When I zoom out, I always look at where the liquidity is. I pre-marked a lot of the liquidity areas, like right here, for example. This is the major structure where there's, for example, there's a low, there's a high, there's another low, there's another high coming in, right? And so what I like doing is essentially marking out a lot of the liquidity. Like right here, you can see that there's a low, there's another low right over here. So this gave me a good anticipation that I should be looking for buys. So Friday's trades were actually right here. This is all Fridays. Now, I'm sorry that all this right here is really messy and noisy, only because these are all, because I scalp all the time, right? So all this is like the previous days of this last week's trading that we've done. So this is where I was focusing a lot of the times, right? I start at 4:30 p.m. 4:30 p.m. And what I noticed, if you can see my crosshairs here, it says 3:30, right? If I keep going like this, you'll see that it says 4:30 right there on the time, right? So again, when I'm on the higher time frame, I quick look at my liquidity. I marked out my liquidity. Liquidities are usually a form of double bottoms, double tops, or whatever. And also, you got the liquidity that looks like, something like this kind of, right? This kind of liquidity, right? It's liquidity where it almost looks like a trend line, right? Where a lot of traders trade on trend lines, or at least a lot of retail traders, right? So if you zoom out here, you can see over here I've marked out this liquidity as well. So I get a good understanding and a good sense of feeling of where the market is and where it should potentially go based off liquidity. So right here, I'm going to go down to the lower time frames so I can show you guys what I did here. Let's go down to let me just cut this here. I want to go all the way down there, and then we're going to go one by one from here. Now, generally, when I'm looking at the markets, I don't try and jump into everything I see. I really just I really have to wait and see for something to happen, right? Like just because it shows me something good, I don't necessarily try and jump in it right away as soon as I get into the markets. As soon as I'm, as soon as 4:30 opens, the New York opens, right? So this is what I see. When I zoom out, again, 4:30 started at, it's 5. Excuse me, it's supposed to be 6:30 because this is programmed at 6:30 over here. It says 6 o'clock, right? So when I move my crosshairs, you'll see 6:15, right? So I get on here about 6:15 Los Angeles time, and then 6:30 a.m. is when the market opens here. So if I zoom out, you'll see that I marked out more liquidity right here. There's inducement right there. If you zoom out a little bit more, you'll see that there's more liquidity right at the top over here. Like this is all pretty much a sell from here, another sell. Although this high here never really went above this high, so I could just mark it. Well, let me just show you what I did here. it's this liquidity here that the market is reacting to. Now I know I didn't put all these supply zones sometimes because I can see everything, at a bird's eye view. So there's liquidity, there's my supply zone, right? That's where that market reacted off to the supply zone after taking all this liquidity and coming here to take out this inducement, right? So once price mitigated, I had to obviously trade away from all this information. Remember, we trade away from liquidity, not towards liquidity. And sometimes when we do see liquidity towards the direction, we obviously want to go and target that liquidity because there's a highly chance that markets are going to go towards that liquidity. Okay, so let's go scale down to the lower time frame here. I go on the 5 seconds and I start looking for entries. I could see here where price was showing us this aggression move here, and normally after an aggression we look for price to retrace back to that supply zone. And so let me see what time here it was. Here at 6:15, right? So I'm not trading anything, I'm not buying or selling anything. I'm really just waiting for that 6:30 open. And then once 6:30 shows, once we're nearing 6:30, I start marking everything out just so I can start preparing for the open, because I like to take advantage of that open if the open really shows itself, if it's a good if it presents itself really well. And the way I know that presentation, if the market presents itself really well, is only when I have done my due diligence, like liquidity, right? So liquidity is where it really shows me what price is trying to do, where it's potentially trying to go, stuff like that. You can see that we had this trendline liquidity here by this low here taken out. We had this these two double bottoms here, the double bottoms or whatever, taken out by this move. So this tells us price is going away from it, right? And so what I was typically thinking in this area here is that I'm looking for buys. Of course, it's not 6:30 just yet, 6:23, so I can't take any trades yet. I'm just scoping everything out. Again, I'm marking everything out. You can see I'm marking out this liquidity. I'm marking out liquidity here. I'm marking more liquidity here, here, and here, right? And the idea of this whole point, again, is to really map out all the liquidity. The idea is to map out everything, because that's what you're gonna get a good sense of feeling of when and where the markets are gonna go. So here it was 6:28, right over here. Now, sometimes, in rare cases, I start taking trades a minute or 30 seconds maybe before the open happens, only because the setup, I'm looking for the setup, okay? And the setup has already presented itself by taking liquidity, showing me that aggression, then waiting for price to retrace back, and now I know this is my strike zone, right? So let's say when price goes, it may not give me a chance to come in and break and mitigate and then go, because when the open happens, it happens impulsively. It starts pushing bearish so fast or bullish so fast that no one has a chance to take advantage of it or grab it. So what did I do? At I believe it was 6:29 right there. As you can see, 6:29, 6:29 is when I striked. Okay, and only and trusting in the process of this, right? And trusting my process. So here's, you see it's 6:30 right now, and then prices are starting to push bearish. So if it was 6:30, there's just no way I would have been able to catch this. And you see how prices are going bearish so fast. So what I do normally is when I enter, I take partials immediately, about 5 to 6% of the time, sometimes 7%. And I believe I took partials right around here, right? So every time price pushes down really aggressively, you can see there's 10% there, 10.4. We took it right about 7% of the way here. So we took partials as soon as price got here, because we knew prices are going to go here, at least to this low right over here, right? Who knows if price is going to go past it? If prices do go past it, great. That's a plus sign for us. But if prices stop here at this low and push bullish, well, then I know why. Because obviously, if you zoom out, you can see that we've been on a bullish trend this whole time. So what I did was I took partials, the majority of the partials, and let the rest run right after 7%. And as you can see, prices started going bullish here. And this is when I was ready to go to break even, right? Now, it's really important here, because it's really important that you break even all the time, right? I always say this on a lot of my recap videos, that you pay yourself first, and then you just you want to break even, because if you took this trade and you didn't pay yourself, and you're expecting for the TP to be down here at this low here, right? Then now you would just be disappointed, for the most part, because now you did all this hard work, but you didn't pay yourself, and now you might be disappointed, Well, that's just in some case. This is in my case, obviously. I'd rather do the hard work, pay myself some, and not be greedy in the market, and then let the rest run, right? There are other gurus out there who say, yeah, to enter, right, and then look and hold your trade to your TP here and stuff, and then this is when you'll take profit, right, and all that stuff, which is good if it works out for those people, right? But a lot of the times, the market has a mind of its own, so therefore we just react and act towards what the market is showing us. Therefore, we need to be able to look and act accordingly, right? We need to have our own ways of trading, our own rules, right? And so my rule is whenever prices show me at least 4 to 5%, at least 5%, I like to take partials out and then get out, or at least, excuse me, not get out, but at least take most of the partials and let the rest run, right? And if prices did go all the way bearish here and tap my low, this is great. I'll take more partials along the way, and then I'll keep extending my reward just so I can continue milking the market, right? So what do I see here? So now that I see all this stuff, again, I see all this liquidity. I see the liquidity. I see my supply zone again there. I'm waiting for prices to, of course, I broke even on this trade right here now, which is good. It's a win-win for me. And then what I'm anticipating here is for prices to come up a little bit more higher because we have this liquidity here sitting, right? We had sellers here and more sellers there. So the market's objective is obviously to go after liquidity. So there we go. Liquidity was taken. I'm looking for the aggression to happen in the market. Right here we have that chalk, right? We enter off of a chalk. It may be a little hard for you guys to see, but there is the chalk there, right? Once we see the chalk, this area here is considered to be my aggression, okay? Then we wait for prices to mitigate, and then we look to sell it off. So that's when we sold it off. Right now, I'm not taking partials right now. I'm waiting for that 5%, 4 to 5% at least for prices to reach before I can collect some of the partials here. Now you can see here, price broke. I believe we took the market was right around here. It's right around the 4 to 5%. Okay, so we wait for price to come bearish here again, at least right there, right? So once price hit like the that 4% or 5%, which is right there, okay, that's when I started to take out partials. And my whole anticipation is to target the slow. Obviously, you can see this liquidity line here now. I mean, because I marked it after prices taken me up above here, as you can see, like this, right? So you see what happened here, right? So knowing that there was liquidity here, prices still, they went bearish, but they didn't quite hit my TP. So therefore, I paid myself here, and I let the rest run. And obviously, whenever it comes down to my entry, right, I'm going to be breaking even. So obviously, another obvious thing here is sometimes as a trader you get so involved on the lower time frames, on the entry time frame, that you don't pay attention to sort of the higher time frame, in terms of what it's trying to do. And here would have been a great anticipation to see that there's a chalk to the downside like this, right? We have a chalk here, another chalk, it's a chalk, right? The low being broken first, the high being broken second, right? And then we have prices retraced to this area here. Now this would have been my initial entry at this area, right? But fear no, I don't fear here, because now what I'm looking for is for the buys. And the reason why I'm looking for the buys is because I quickly adapted to what the market was saying in here, right? You can see that this high here voided out this liquidity. It took all the liquidity, so therefore it's not going to be a sell anymore, because prices have just pushed bullish here, and now we're looking to see if prices can break this high. If it does break this high, then we're looking for the buy here, and I'll tell you why we're looking for the buy here in just a second. All right, so this confirmed to me that we're looking for buys. Now I didn't mark this out here, but I can see there's more liquidity here. Prices came and took liquidity. Prices could have actually decided to push bullish like this, right? Because again, when prices go after liquidity, they don't have to come down to your order block. They don't have to come and mitigate, right? Markets don't need to mitigate. They have a special mission, or at least the banks. Let's just say this in this case, that the banks have a special mission. They have an idea of where they want to go. They don't do what we want it to do. We got to do what they need to be, what they want to do, and then we follow their sort of their behavior, right? So I anticipated here that once we had this chalk here, that we had this entry here that I didn't enter just yet because I was selling it here at this point in time. But then I understood, again, when we have this chalk and we had all this liquidity taken here and here, right there and here, that we're going to be using all this liquidity now to push bullish. And so we had the first break, the second break, right? We had two mitigations that are happening. This is the second mitigation that's happening right now, right there. Okay, so we had the break in mitigation, another break in mitigation, and so this is part of the healthy order flow that we consider it being a healthy order flow when price breaks a couple of times or maybe a few times, and then price starts to overextend, and that's our healthy order flow that we'd like to see in the markets. A lot of the unhealthy order flow that I don't like is when you see constant break mitigation, break mitigation, break. It just keeps doing this, right? And this is when you really want to be aware that you're in a liquidity pool that the market is setting up, right? For potentially for the markets to just take, one huge swing like this, taking everybody's stop loss from every low like this, okay? And so that's what we consider as unhealthy order flow. So here where we sniped, right, you can see the only reason why we sniped here is because we identified more liquidity here. Notice that we didn't just buy here immediately, right? We could have, but we didn't, right? We could have had our our risk at this low, right? But we wanted to have our risk a little bit better positioned in the markets, okay? So if we zoom in here, you can see that there's liquidity there. Price came in here. We could have taken a buy here. Of course, I was just being a little careful, just watching the markets again. I was seeing if price gave me another chalk. If it did, I would look to enter here at this flip that I see right there, right? But I entered a little early because I can see there's more liquidity here, right? Price went to take out this liquidity, so I thought to myself, okay, well, prices should just go up based off of this major liquidity and this major low here that has swept all this liquidity. So it should really just go. I positioned myself really well here at 0.5%, right? That's not even 1% right here. And then we took that entry and we just stayed in it. So obviously, when price goes up at 5 to 7% or anywhere from that, right, we pay ourselves right away. I was targeting this high initially here, at this high, because I didn't know if price was going to go bullish from here, and evidently when we zoomed out and went on our higher time frame on the 1 minute here, we actually were able to speculate what the market was doing here. So right here's where we paid ourselves at this high right there, right? Took partials, a lot of the partials, and when we zoomed out, I was kind of speculating for the market to continue pushing bullish, and if it did, it would take out all this liquidity right here. So this gave me enough confidence that prices were going to push bullish. And then not only that, if you zoom out here, let me go on the 5 minute here so I can show you guys a little bit better. Why I was actually holding this trade here to go all the way to the supply zone. Now the reason why I was holding this all the way to the supply zone is because if you see here, we have our major liquidity that was taken, okay, by this low here. So this low here actually took out all this liquidity, mitigated at this demand zone here. As you can see, it's perpendicular to this area here, right? And then price just started pushing. So my anticipation is that price should still push bullish, only because on the higher time frame here, we have a high, low, and we're already trying to push bullish here. Okay, so this push here should be just going flying. And so yeah, so let's go down on the 1 minute here. So I'm holding this and then just entrusting the process, and then along the way as I'm holding this, I'm looking to see where the other liquidity areas are in the markets, where price is potentially going to go and take out that liquidity. And you can see here all this was taken. I don't really need to be paying attention to this little small stuff right over here. Like all this little stuff, like there's some liquidity here, whatever, maybe some trendline liquidity happening in here and whatever. Pretty much just connecting all the dots, like all this stuff, right? Like this is all little small stuff, but I'm trying to look at the major liquidity, where price is going to go on the major part of things, on the major liquidity side of things. You can see there's a lot of liquidity. There's liquidity here, right? There's sellers here and here. Notice this sell went pushing bearish. Nothing mitigated. So there was a huge anticipation that prices should go up at least that towards this area, right? And if not, if it is, and it breaks above this liquidity sign, that we have more major liquidity. If I zoom out here, you'll see there's more of it right over here. If this works, right there. Right, so we should be going pushing bullish over here. So let's continue here, and I will show you what's happening here. So once price is pushing bullish, I'm sitting happy. I'm so satisfied, right? We're collecting a lot of R&R here. We're at this high at 31%, so I'm pretty happy here. I'm like sitting real pretty over here, to be honest. And at this time, as this time is going, I'm obviously not trying to rush myself in any trades. Like sometimes we have the tendency to rush into trades. And my thing was, okay, well, I'm already in a nice big trade, and I've made a lot of money already here and here in this trade now. So let's just wait it out, right? Let's just see what the markets are telling us right here. So let me just pass this by. You can see I was marking this just to see if there's any behavior. The price is going to push bullish. If they were, I was going to take a buy. Nothing happened. This is going to take a while. Let's just go on the 1 minute here and explain to you why and how I was looking to sell this here. Let's fast forward. All right. Okay. Let's just get to the here. Okay. So, right at this point, I was noticing that we were still bearish. We were going bearish, and I was like actually ready to, hit break even here because prices are getting so low. Now, I wouldn't just break even just because we're this low here. I need price to be very low, right? Where it's almost predictable that price is going to actually just take me out. So might as well just take myself out, earlier. Anyway, here I was following this trend where price was going bearish here, and you can see that there's a high and there's a low here. And on the way from this high to this low, I'm looking for liquidity. Again, I'm looking for prices to show me more liquidity. I won't sell or buy until I see liquidity, right? That famous saying is, if you can't see liquidity, then you are the liquidity, right? Right over here, I had a high that I marked out. There was a break of structure, right? Now, there's a bunch of liquidity here, as you can see right here. Although I wasn't involved in any of this part. I'm going to zoom in. I'm going to fast forward here until I got into the trade so I can explain to you what happened here. All right, so there we go. So what did I do here? I noticed we had all this liquidity. There's more liquidity here from this high to this high. So we had double tops, right? Prices, I'm looking for price to show me the aggression sign, and there's your aggression sign. The aggression showed me the chalk as well, which is a good factor in this. And then I looked to sell, but then again, I was really well, you can see here there was not a bunch of liquidity that I could see. I was seeing double tops there, more liquidity there, so I was kind of waiting for price to just take it and push bearish here. And if it did, I would sell it off from there. Now here again, we follow the same rule from here. We gotta see the aggression, and it wasn't right here. It's not right there. Excuse me. This was my supply zone right here. I don't know why I didn't put my supply zone, but I knew that was my supply zone there, because that was the this wick here is the it's the liquidity grab, right? It clears the liquidity sweep, this wick. So I knew that this was my sell. I had to wait patiently for price to get there again, and once price got like that, I was able to sell it. Now again, the reason why I'm selling here, guys, is because if you see here with so much liquidity in here, so many sellers here, I mean everywhere, right? And we were already at the very low from this trade here, because that's our high, here's our low. So we were already at the lowest of a low, and once you see liquidity, you trade away from it, right? So we took out more liquidity, price showed us more aggression. Then I had my chalk that was presented to me here. There's your break to the downside, right? And then I just sold it. And once I sold it, again, my rules is to collect 5 to 7% as soon as prices show me the aggression, right? So we paid ourselves 5 to 7%, and then I just sticked into this as usual. I was trying to target this low here because this is where that demand zone was. I didn't mark it out, obviously. Sometimes I just don't mark out. I can't see this here. Sometimes I don't mark out my demand zones. Okay, I'm in the way anyway. That's my demand zone there. I don't mark out my demand zones sometimes only because everything's fast on the seconds time frame, and I can already see where the market's going based off of my experience. I've been doing this for about 5 years already, so I have enough experience under my belt. All right, so I keep paying myself. Once I paid myself 5%, I keep paying myself every like 3 to 4%, sometimes more, 5%, depending on what the market is doing. Right now, the whole part about paying yourself is you're managing your trade, right? I'm managing myself. Once I'm in this big trade here, I can also look for sells, right? So I'm typically hedging this, if you will, if you can say that, right? I'm typically hedging this. So I'm buying here, I'm also selling here. I'm holding both positions open just in case one fails. I can continue this trade bearish now, and I can still continue milking this bearish, right? The whole idea here again is not to be greedy. It's to pay yourself, handsomely, and then let the rest go. Because at the end of the day, if we're too greedy, then there's gonna be people that are fearful. If there's people fearful, that people are gonna be greedy, right? That's a famous Warren Buffett quote. Okay, let's go in here. Right over here. What am I doing here? Well, I noticed that we have a break of structure here. I noticed that we're still bearish. If you zoom out here, you can see this whole swing is still bearish. I'm just, again, scalping. I'm not trying to break the bank or anything. I break the bank based off of the lot sizes that I use, mind you. But that's a whole other story for another time. So what do I do here? Well, I can see a lot of liquidity here, a lot of liquidity here. We have a break of structure here. We also have a lot of liquidity here. Again, I don't mark a lot of this stuff out if I already can see it in hindsight and know what's happening. What I'm waiting for price to do is just take that liquidity, and you can see it right there. Liquidity ran, right? We had a sweep of liquidity right over here, all these highs, right? This high went just above here, swept all this liquidity, and then once that has happened, okay, I'm just waiting for the aggression. Not yet, not yet. Okay, let me just zoom in here so I can show you a bit better. This was the sign right here. If I show you this chalk right there, there's your chalk, right? So this is considered my aggression from this high to this low. It has broken, so we have a break to the upside and a break to the downside. There's my entry. Here's the sweep of liquidity right there, this wick that swept the highs, and we were able to enter here just fine. Now, I entered here, and again, what did I do? Pay myself about 50% of the way, or about 5 to 7% of the way. I believe this was about 5% of the way already. Yes, it was. So I already paid myself here, and I let the rest run, and I would still collect more. So when this wick dropped, I collected more, right? And knowing, now the reason why I targeted this low here is because, again, if we zoom out, we're actually bullish and bearish, right? I mean, I'm not trying to take this right over here and target the low, even though I have this already, this trade already going bearish here. I'm just paying myself small here. I'm not trying to go big, and then whatever, get run over. So I targeted this low, considering that this was my order block here. This is a demand zone actually, right over here. Because this is our high, this is our low. It's the last low before the market pushed bullish here. And then that's what I did. I stopped, I don't know why this is here. It's supposed to be there. And that's what I did. So I took most of my partials after this, after the market dropped here, and then let the rest run. And I believe price ran over here. Yes, that's what I did. Okay. Price just went right through. I broke even again. So if I zoom out, you can see that I'm still in this trade and still in this trade. I'm going to buy and a sell still. And I'm just looking for more opportunities. Once I zoomed out, everything told me clearly that we were looking for buys. We should have been looking for buys. And the reason why is because we had a bunch of liquidity sitting at the lows here. This low here swept the liquidity here. And then we had this aggressive aggression here, right? We had that chalk right here that we're talking about. There's the entry. I should have entered here, but of course I was too busy looking at a smaller trade, which is no problem because now I'm adapting to the market. Now I'm ready to take the next buy here. Let's just zoom in right in here so you guys can see the detail of what has happened here. So once price has broken a new high, as you can see, we had more liquidity swept. I treat this as a chalk again, and let's just go here. So I asked myself, who broke this high? Right, it was this low right over here, which I didn't mark out as far as my demand zone goes. Right there, right, but you can see my little other demand zone marked out here. Let's go down here. All right, and this is what happens. The flip wasn't respected, so I was like, okay, that's fine. I'll just get out of there. because my next demand zone was this area here as well. Right, so I could have looked to enter here. Excuse me, it would be right there. From right there. Okay, so I didn't enter there, and I'm like, okay, I missed my opportunity. Can I get in again? Right. So I let the market play. I go down here and I see what has happened. Oh, excuse me. I entered the market off of here. Once price tapped our demand zone, price broke here, and here's our flip. Now it's too hard to see, I know, for some of you guys because I entered this on the 1 second, but that wick right there broke above and then tapped our demand zone. So this I already entered as soon as price. I entered really fast, so I went on the 1 second to enter this market. Now, some of you guys may be saying, well, 1 second's too busy, too fast, everything, the seconds are too fast. And you might be asking, are you able to trade your type of strategy or theory on higher time frames? Well, the short answer is yes, you can, because if you understand that how market structure is fractal. It works on every and any time frame, right? And they work for every and any type of markets as well. So what I did here is I took the buy, right? I paid myself about 5 to 7% of the way already, and seeing that this is so bullish here, this is what's really enjoyable in my case, is that whenever the type of strategy and theory, the theology, the way we trade is, every time we enter the market, we get this huge push, right? We get this impulsive push to the upside or downside. We're immediately into profit only because we understand what is happening behaviorally in the markets, okay? And for those of you that are a part of our Royal Blu FX membership, obviously you understand how you obviously understand how to enter, and where our entries are, where our TPs are, and stuff like that. All right, so what we did was here, we stayed in the markets. I'm going to actually go on the higher time frame here because I stayed into this, and I want you guys to see something here. Right over here. Once price got up here, we broke even on this trade. Okay, so we collected a lot of partials here, which is beautiful, right? Now we're out of this trade, and then for the long term here, you can see that we still have this low here. We never got out of this trade, so we stayed in this trade once price is bullish here. So let's continue here, and I'm going to show you what's happening. There we go. We keep paying ourselves more and more as prices push about 4 to 5, sometimes 3, 4 to 5%. Really depends on, again, what the market is doing. If it's too, if it's too rangy and stuff like that, then I obviously would be making sure to take out most of my profits, because when it's too rangy, that shows us that there's liquidity there, and prices could take out the liquidity and push the opposite way, and then we might regret not taking most of our capital there, right? So watch what's happening here. We took more of our capital here, right? We're sitting real pretty in this one. This is just too beautiful, and this one in particular is too beautiful too here as well. We take more partials along the way. Now I'm not trading anymore. I'm done for the day. I'm really just waiting for this high to be tagged here. This is our supply, right? We almost hit it right there, right? Sometimes it teases us, but there you go. We just hit our supply zone right there. And then we made a whopping 51, I believe it was 51.2% right there, as you can see. 51.2% on this trade, and a whopping 41.5% on this trade, right? And this one was, it wasn't there. It was, we took our last partials right around the 10% mark. So yeah, it was about 10%. So 10%, right? So we are literally looking at about 100% on, well, more than 100% on this entire day here on these trades. And that's how it's done, guys. All right. And, of course, we could let the trade run more, but we took everything out on these trades because it was Friday. I didn't want to be stuck in the markets. Now, sometimes it may be smart if I'm seeing everything long term, which I might have wanted to actually stay even longer to tap these highs over here to hold these trades like this. This would have been a 164% and a 97%. So imagine that. Imagine these two trades making it big over here, right? But again, I'm not being greedy. Just want to be exiting out and not floating in the markets while it's during the weekends. Okay. So guys, if you really enjoyed this video and you found it very informative, informative, excuse me, please throw a huge thumbs up like on this channel, and always subscribe to the channel because we always give out free content and amazing content. I hope so. All right, guys, until then, I will see you in the next.
This time, what you think about,